Good morning. Wall Street's main indexes rose towards record highs on Thursday after US President Donald Trump dialed back his threat of tariffs on European countries, while a new batch of economic data underscored a resilient US economy. Short-dated bonds fell and gold climbed above $4,900 an ounce for the first time. At the close of trade on Wall Street, the Dow Jones index rose by 307 points or 0.6%. The S&P 500 index gained 38 points or 0.6%, and the tech-heavy Nasdaq index added 211 points or 0.9%. The gains follow the S&P 500 index's biggest one-day gain in 2 months on Wednesday, when Trump stepped back from imposing tariffs as leverage to seize Greenland and said a deal was in sight to end a dispute over the Danish territory. Trump's tariff threats had sent shivers through global markets on Tuesday, though buyers quickly returned to stock markets following his U-turn. Small caps beat the US equity benchmark for a 14th straight session. The small cap Russell 2000 index gained over 0.7% to a record high. Mega cap stocks were at the forefront of the rally, with Meta Platforms jumping 5.7% and Alphabet, Tesla, Microsoft and Apple all up between 0.3% and 4.2%. Meta's strong performance was behind the 1.6% increase in communication services stocks, the strongest sectoral performer on the S&P 500 index. Chip giant Nvidia rose 0.8% after comments by CEO Jensen Huang bolstered the artificial intelligence trade. JP Morgan Chase paired gains up 0.5% as US President Donald Trump sued the bank and its head Jamie Dimon over alleged debanking. Arista Networks jumped 8.7% to become the S&P 500's top stock in Thursday's session. The catalyst for the big move wasn't immediately clear, but analysts noted increasing buy-side interest in the company because of its exposure to artificial intelligence back-end networking. Cloud software company Datadog was up 6.3% after an upgrade from Stifel to a buy rating from a hold on the stock. The firm expects Datadog to post strong fourth quarter growth, topping estimates once again. Northern Trust shares popped 6% after the bank beat Wall Street's expectations on the top and bottom lines in the fourth quarter. Consumer products company Procter & Gamble gained 2.7% after its fiscal second quarter adjusted earnings of $1.88 per share topped the LSEG consensus estimate of $1.86 a share. McCormick tumbled 8%. The world's largest spice maker missed quarterly earnings expectations and issued mixed guidance for fiscal 2026. CEO Brendan Foley cited headwinds resulting from global trade dynamics. Intel reported fourth quarter earnings on Thursday after the bell that beat Wall Street expectations but offered soft guidance for the current quarter. Its shares fell over 6%. Traders' expectations that the US Federal Reserve will delay interest rate cuts until later in 2026 were reinforced by US economic data showing resilience in the job market and consumer spending. Short maturity US Treasury yields reflecting expectations for Fed rate changes rose, with the 2-year note climbing 2 basis points to 3.61%, the highest level since December 10. The US 10-year Treasury yield was steady near 4.25%. Yields across maturities reached session highs during the US morning trading session in the wake of data showing a smaller than expected increase in applications for US jobless benefits last week, indicating low layoffs. Data showed the number of Americans filing new applications for unemployment benefits increased marginally last week by 1,000 to a seasonally adjusted 200,000 for the week ended January 17. Economists polled by Reuters had forecast 210,000 claims for the latest week. A separate report from the Commerce Department's Bureau of Economic Analysis showed GDP increased at an upwardly revised 4.4% annualised rate, the fastest pace since the third quarter of 2023. Consumer spending rose at a solid pace in November, up 0.5%, suggesting that rising wages fueled economic growth in the fourth quarter. Data, however, showed generally benign inflation numbers for October and November amid a US government shutdown. The core PCE price index rose 0.2% with the same margin in October. In the 12 months through to November, the so-called core inflation increased 2.8% after advancing 2.7% in October. Analysts, however, said inflation numbers are currently expected to come in at a stronger pace in December. European share markets logged their biggest daily jump in nearly 2 months on Thursday in investor relief that US President Donald Trump dropped tariff threats on regional countries and ruled out the use of force to acquire Greenland. The continent-wide FTSE Euro First 300 index jumped 1%. Construction stocks and banks led gains up 2% each. In London, the UK FTSE 100 index edged 0.1% higher. In commodity markets, global oil prices slid on Thursday as Ukrainian President Volodymyr Zelensky discussed plans for trilateral meetings with the US and Russia. Signs of ample supply were evident in a US government report that showed US crude stockpiles rose 3.6 million barrels last week. The Brent crude price fell by 1.8% to $64.06 a barrel, and the US NYMEX crude price slipped 2.1% to $59.36 a barrel. The Gulf futures price jumped 1.6% to $4,913.40 an ounce, powered by ongoing geopolitical tensions, a softer US dollar, and expectations of US Federal Reserve interest rate cuts. Spot gold was trading near a record peak, over $4,920 in late US trade. Elsewhere, spot silver surged to a record high of $96.58 an ounce. Copper futures lifted 0.2% and aluminium futures gained 0.9%. Iron ore futures dipped 4 cents to $106.42 a tonne as investors weighed robust shipments from Australian mining company Fortescue against Chinese monetary policy support. Australian shares are poised for a quiet open to end the trading week, with futures modestly lower ahead of the Australia Day long weekend. According to latest SPI futures, the ASX 200 is expected to open the day 8 points or 0.1% lower this morning. Yesterday, net Australian employment jumped by a robust 65,200 jobs in December, with full-time jobs up by a massive 54,800 positions and well above forecasts for a 27,000 gain. The unemployment rate unexpectedly fell to 4.1%, the lowest level since May last year from 4.3%. Investors currently see a 60% chance of a rate hike from the Reserve Bank of Australia on February 3, compared with 26.5% before the data. Fourth quarter inflation figures due on Wednesday look set to make or break the case for a rate hike next month. On the Australian data docket on Friday, S&P Global is expected to release flash manufacturing, services and composite purchasing manager or PMI readings for January. Alcoa is set to report quarterly results. Financial markets are closed on Monday in observance of the Australia Day public holiday. New Zealand is set to report fourth quarter consumer prices or inflation on Friday, and the week is expected to end in the US on Friday with S&P Global PMIs and the final University of Michigan Consumer Sentiment Index reading for January. Meanwhile, S&P 500 oilfield services firm SLB, formerly known as Schlumberger, reports earnings on Friday. Commentary on Venezuela will be in focus. The safe haven US dollar slipped on Thursday, while risk-sensitive currencies such as the euro and sterling firmed after US President Donald Trump dropped tariff threats and ruled out seizing Greenland by force, helping calm jittery markets. The Australian dollar rose to a 15-month high, buoyed by data showing an unexpected decline in the jobless rate in December. The Aussie dollar lifted from 67.94 US cents to 68.45 US cents and was last near 68.4 US cents at the US close. For further developments on today's local trading session, please tune into the CommSec Market Update podcast this afternoon. Thanks for tuning in and have a great long weekend.